2 weeks ago, the first Bitcoin exchange-traded ETFs were launched following approval from the US regulator. Now, the headlines have been all pretty positive. They've been dominated by news of record flows in a very short period. Many are citing this as a watershed moment whereby it will bring Bitcoin to the masses. It will mean Bitcoin will find its way into client portfolios. I don't think these headlines are quite capturing the full story. So I'm joined by Sunil Krishnan today, who will indeed tell the full story. So Sunil, let's get straight into this. I mean, I guess let's start with the background. What exactly has launched in the past couple of weeks?
Well, the launch of new ETFs isn't really news by itself. I mean, there are tens of thousands of them, and they are opening and closing all the time. And just for those who are less familiar, the point of an exchange-traded fund is it's a fund, but you can trade it on an exchange like a share. So that helps in terms of liquidity and sometimes in terms of lower fees. Now, I guess the story here, as you say, is that they are Bitcoin ETFs. So following the approval by the Securities and Exchange Commission in the US, the regulator, that you can have ETFs which are linked to Bitcoin, we've now had about 20 new ETFs produced by a mix of some of the world's largest banks and asset managers, but also some lesser known issuers who've put these on the market. And overall, for a few days of trading, there have been some pretty big flows into these vehicles, which have caught the headlines, perhaps about $5 billion worth of flow so far.
Yeah, I mean, they're massive flows. $5 billion, as you say, has been cited. I mean, with that level of demand, you would assume that that results in, you know, a pretty positive backdrop for the Bitcoin price. So have we seen a surge in the price?
Well, as you say, I think a lot of commentators thought when they get their approval for ETFs, they will have entered the mainstream like shares and bonds, and that will attract a whole bunch of new investors. Hasn't quite worked out that way, though. As of today, the price is actually below $40,000, which is about 16% down since the first ETFs launched a couple of weeks ago. So that is the other side of the story. And I guess the particular part that isn't attracting the headlines is that what's happening is other existing Bitcoin funds are seeing outflows at the same time as these funds are seeing inflows. So, for example, the biggest Bitcoin fund seems to have lost about $6 billion since the start of the month. So you're just seeing movement from one channel to another. And you can understand why as well, because that big Bitcoin fund has a management charge of about 1.5% per year, whereas one of the ETFs probably has a charge more like 0.15%. So you can see that it does make sense, but it's not necessarily driving new money into the asset class.
Okay, understood. So some of the old funds and trusts are losing money, whereas the new ETFs are attracting it, but net, it's not necessarily new money. Okay, it makes sense to me. I mean, Sunil, from your perspective, with these new vehicles in existence, it does, you know, introduce more liquidity. It does potentially introduce lower costs. Does it make it more attractive for you? And would you consider allocating to Bitcoin now within some of the multi-asset funds that you manage?
Well, I've said it before, and I'll say it again. We always want to be open-minded. As multi-asset investors who are interested in diversification, we never want to say that we would never look at something. And certainly when it becomes more liquid and perhaps trades on recognized exchanges, it certainly makes it easier for us to consider. Having said that, at the more fundamental level, we still find it a really hard asset to value. It's quite hard to understand how it drives gains over time and performance other than just people fancy buying it. And also from a risk perspective, a lot of people talk about it as a diversifier, but A, it's super volatile, and B, increasingly we're seeing that volatility does have a connection to the stock market. When the stock market's doing well, Bitcoin tends to have a bit of a tailwind, and equally weaker times for the stock market tend to coincide with more challenges for Bitcoin. So you put these things together and it isn't quite compelling in terms of an addition to portfolios today.
Okay, understood. Yeah, I mean, look, I think overall, as you say, it's a step forward. It makes the asset class more accessible, but it's not necessarily dealing with some of the fundamental concerns that you and the team have. So maybe not one for today. But certainly one to keep an eye on. Sunil, very insightful. As I said at the outset, there were two sides to this story. I think we've covered both sides. We will be back next week. We will put a fund manager on the spot. Until then, take care.